Hello and welcome to the Theory of Thing Investment Podcast. My name is James Wheeler. I am the Managing Director of Barclay Pierce Capital's Wealth Management Team. I'm joined by Heath Moss of HLM Investments. Heath, how are you now?
Oh, not too bad, mate. Got a bit of a cough, caught whatever the kids get brought into the house.
So, you guys are killing me.
I know.
The kids are sick, you're sick, everyone's sick. It's just South Australian sickness. That's what it's called. At the time at the record, well, it's Friday morning, the 9th of August, 2024. A couple of days left of the Olympics. Now, also, before I start, I've got ask and ye shall receive. Every flavour of wakey that you can
there's
possibly
different flavours,
imagine.
Is there?
Yeah, there's different flavours, okay? So this is a wakey, good product, okay? This is, I've got the berry flavour. I've got...
Very good.
Berry flavour. Okay, hang on, that's the same one. I've got caffeine, energy, muscle health, lemon flavour with magnesium in it. That's the blue one. And I've got wakey, lemon and lime flavour. That's that one. Which one do you want today?
So I'll go the berry one. I'll go the berry one.
I'm going to go the magnesium. I'm not going to listen to you, but I'm going to go because I need the blue one with the magnesium in it because I'm doing a rugby challenge because we're a sporting broker. So we're doing a challenge. So I said that I'd be a competent winger at rugby level, not the highest level, but I just thought that I'd be. And I've never played rugby union before. Thank you very much. It goes.
Beautiful.
Yes, wonderful. So competent at a rugby at a reasonable level to play competently. So we've set this challenge here because I don't know how to back down from a challenge. I'm obviously way too ambitious for my own boots, and I also remember when I wanted to do jump or didn't want to do jump rope. Somebody challenged me to compete at a national level in jump rope, and 6 weeks of training, and I won a gold medal. I won a national title. That's 2, in fact. That is the sort of attitude that I bring into everything that I do, of just blindly backing my own capabilities, regardless of how ridiculous it is. I could get myself killed doing this thing, right? I'm not a rugby build. I'm an former AFL player. I was a shortstop in baseball for like 15 years. You can sort of see that I've got the build for that. So anyway, so I'm doing a rugby. So day one was training. Day one training was yesterday, and I've pulled up a bit sore.
You sore?
I'm gonna lie to you. I'm just working on taking high balls and working on my step and everything like that I need. I'm going to work my way up to actually getting and taking a tackle as I go through. So that's going to be the hard part as we sort of get to that. Anyway, mate, we don't have much time to lose. I'm due in a meeting at 11 o'clock. It's 10:45 in the morning, so I've got to get to this thing. You know, just launch into, mate. How was your week? How's your week?
Oh, mate, it's been sick. That's all it is.
Okay.
Kids home from school sick. It's nothing new. I've caught whatever they've got, and markets were a little bit sick to start the week, but yeah, it's been a nothing week for me, unfortunately.
Okay. Well, I mean, I'll tell you, it's been one of the most volatile weeks of my entire career. I went to clients on Monday morning first thing and talking to the marketing team that the listeners that have done a great job this week as well. We knew that over the weekend, we knew that this week was going to be funny. We didn't exactly know how wild it was going to be, but I went out to every client and every potential client and all of the people that sort of follow me, and I said, be cool. Just be really, really down to zero, but just a little bit lighter if you can spare it, because the US market was expensive going into it, and I've been saying that for a while. But anyway, look, it seems like that was proven correct, and now it seems like it seems like, I mean, you go into it, mate. Show me the S&P.
I will.
You pull up the S&P, and then we'll know exactly what it is you're talking about. Yeah, I'm just shutting down.
All right, there we go. There we go.
Good.
All right, beautiful. Good. So I'll be as quick as I can. I know we are pressed for time. So you can see here, starting last week, where we came off, we had the week ISM numbers, then the week jobs numbers on Friday night, scared the living you-know-what's out of the market, thinking perhaps the US is in recession already. And we came off about 6% there. If I zoom in, from there to there is about 6% over 3 trading days. And basically that's it. And since then, we've had ISM services numbers come through, which were weaker than expected, but still strong at 55. So in expansionary territory, so still strong. Then we had continuing initial jobs claims last night, which came in lower than expected. So that was good news. And I think that's what the market wants to see. from now until whenever the Fed meets in September, they'll want to see continued solid US data to prove to it that, hey, you're not in a recession at the moment. Because that what was that rule? SARM rule. The SARM rule was
No,
triggered
there's a
last
new
week.
there's a new BS rule that
I
comes up
know,
every couple of
I
months about
know.
how the sky is falling. I swear to God, and then I
Yeah.
get everyone texting me out of the blue, just going, Jimmy, this SARM rule, you didn't see this coming. It's just like, mate, no one had heard of this thing 2 seconds ago. Now all of a
I
sudden
know.
everyone's an expert, and everyone wants to be an expert on the BOJ
Yep.
just out of the
Yep.
blue. Come on, guys.
And
also,
and I mean,
that wakey wakey with the magnesium in it is actually really nice. I mean, that's lovely. Thank you, George.
beautiful. And I think the market was just spooked because they got those two really weak numbers last week. But if you drill down further into the jobs data, you had 249K temporary layoffs, and most of it was due to hurricanes in the southeast Florida area. So they're saying jobs jumped up to about 4.3. They reckon jobs could come back down to 4.1% unemployment rate in September on the back of that alone. So I don't think the US is in recession at the moment and or close, but we'll leave it there. So that was the US markets. I'll quickly bring up the topics for Japan because obviously that was the main talking point this week.
Limit down. Limit down. The sky is falling. That was
Yeah.
it was just like we will never financially recover from this ever again.
And so you can see there on Monday during Asian trade, the topics, the Japanese main index was down 12%, their biggest fall since the 87 crash. And this was all triggered because of the US markets. Basically, everyone knows about the yen carry trade. You borrow in yen in a very cheap interest-bearing currency, and you invest in US dollars, which is yielding 5% risk-free in their bonds. So you can make an easy margin there of maybe 3% or so. But what happened, obviously, with the US markets and recession fears, we had US dollar come off, you had yields come off, and then you had the yen spike and a yield spike over in things. So everything went against this trade. Everyone had to get out. And that started last week on Thursday, and then we saw it accelerate on Monday, and then we got margin calls, and that sort of snowballs. You get margin call, people have to sell, more margin calls, and it snowballed into.
There was a few margin calls, weren't there?
Yeah, there were.
I'm trying to see. Hannah, sorry, you keep going. I'm going to pull up.
Yep.
I'm going to pull up the that thing. I'm going to move my
So,
wakey magnesium style. I can feel that helping my calves as it goes, man.
Depending on how we depending who you look at. I mean, I've seen JP Morgan say we're 65 to 70% through the unwind of the margin in Japan, because a lot of retailers get caught up in this too. They borrowed in Japanese very, very cheap, and then went into their own market and bought the Nikkei or the Topex. And you can see how the rally it's had since what was it, May of 2023. It's up, what are we there? Up about 30-40%. So it's been a massive rally, and this all just came to head, and it was who could get out of the door quickest, and everyone rushed the door at once, and we all know what happens then. But since then, we've sort of found a little bit of normalcy. It bounced 10% on Tuesday, continued to rally a little bit. If we look at the VIX quickly, we can see on Monday night it spiked to 65. That was untradeable though, but it did spike to 65. It's back down at 23 now. Most people say that if it's 20 or below, then it's a fairly calm, rational market. So maybe we're already getting back close to those sort of levels. Who knows? But it's a tough one to look at the moment. It's a tough one to forecast at the moment because of all this uncertainty.
Yeah. Would you be plowing into the Nasdaq here?
No, I haven't been playing. I've been slowly accumulating. I grabbed some Microsoft on Tuesday night.
Yep.
And some Nvidia as well. So I've started accumulating those stocks. I haven't gone all in, and I think Chris Weston, a friend of the show, said it best. Wait for the dip and buy the rip, and that's what I'm waiting for. Waiting for that. The market's going to want to see consistent, solid macro data out of the US to convince, okay, we're not in recession. Things are still okay. Earnings are still moving on towards the upside. Before the market consolidates and it starts moving higher again. So that's what I'm waiting for. But I'm happy to accumulate on further falls as well, because Microsoft was down 15%. Nvidia was down 27% from their highs. So really good, high quality stocks at discount prices.
Bargain basement prices. You liked it here, you're gonna love it there. And don't forget that those stocks, not to be like a Gerber Kawasaki jackass, but don't forget that those stocks, everything goes through those stocks.
Mm-hmm.
So, oh wow, that's interesting. Sorry, just getting messages. I'm still trying to work while I do this. That those stocks are, some of the biggest ones. Everything has to go through them. They are fairly, I want to say, recession proof.
Mm-hmm.
I know I'm going to regret saying that, but they
You
do
will one
trade
day.
like big defensive stocks, and they do just cash generators, and they can go to the debt market. They don't need the debt market. They have their own equity. They could borrow whatever they borrow against themselves, whatever the hell it is. So that they are fairly immune on these sorts of things. Stats that matter for you, why you do not panic, and then we'll probably just do footy tips, and then I'm going to go, man. So
No worries.
I've got to be over at Salesforce Tower in 5 minutes. Great. Such as the life of a managing director. It's lots of fun. The JP Morgan says institutions bought the dip while retail panic sold aggressively. This is what I went to everyone to say. Relax, calm your farm. Retail sold $1 billion. That is minus 2.5 standard deviations below, 2.5 standard deviations below the 12-month average for that amount to happen on that day. Institutions bought 14 billion. That's 2.9 standard deviations above 12-month average. So these big panic signs are purely a transfer from retail to the institutional side. I know a lot of that's going to be from margin. People who just have to sell. That's sort of how it goes. But then you've got institutions who just have to buy. That's why which is why I do prefer, and making sure that you're in the right product, but backed by a big place that just does it all for you, and tailored to your risk, which is one of the services that we offer here at Barclay as well, for all of your needs. Okay, give me a footy tip, bro.
What have I got? I went simple this week. My only one of three came in last week. Terrible week for betting. I'm actually backing my Crows in Sunday night, paying $2.97 at home versus the Dogs. I know the Dogs are in good form. Rankin will be back. I think we'll win by a couple of goals.
This is democracy manifest. May he rest in peace. I'll tell you, I was made the joke about the Paris, the Hockey-roo, who got caught. He got arrested trying to buy some cocaine over there, and it was on the same day. I was thinking he should front the media and just go, "What is the charge? Buying a bag, a succulent Parisian bag of cocaine." This is democracy manifest. Anyway, as if it wasn't bad enough imagine that, getting bailed out of the Olympics, not getting a medal, and then getting picked up just trying to get a baggie on your baggie. Mate, it's a tough run away. That is a tough trip.
It is.
Mate, I've got Sydney Collingwood is going to be the game tonight, but I don't want to put out a thing about tonight's game that's coming up. What else we got? What is there? Fremantle. Melbourne Port. Here we go.
Yep.
Head-to-head, Port 10-6. This is the Scout Port near the MCG. Gives it a line, no play. Agree with the market margin. Port 1-39. There you go. I hate it.
Beautiful.
Port 1-39. That's it. Heath, if you got anything else, make it now. Otherwise, I've got to lock it down and run.
I'm all done. Have a great weekend, everyone.
Thank you very much, and thank you very much to the good people at Wakey for sending us some more things. I am now triple caffeinated, but I've got a good magnesium hit too. I can feel my calves just breathing a sigh of relief as I continue this rugby challenge. And I will be keeping you posted on this rugby challenge as I go as well, posting videos through the entire track of it as well. I am powered by Wakey. I will be coached by Playbook Coach, who are big fans of as well, and going through that as well. So that's Chris Lynn's app where you you pick your coach. You can elect your coach and book them in. Playbook, I'm going to be getting a rugby coach. I've already got a guy lined up through it, so I'm going to go through that app, get myself a rugby coach to help with some of my speed, some of my step. I'm going to do that thing, the rugby players where they jump up and then they do that sort of the thing, and you don't know where they're going to go. That's what I need, a little fake outs with it. It was Tomoda Tahu used to do it all the time. I think it was. So look, those ones, that's what I've got to do. Anyway, it's good. So thank you, everyone, for joining us. It's been a hell of a week, but we did manage to get there. Thank you so much. You've been watching and seeing and listening to the Theory of Thing Investment Podcast. I'm James Whelan of Barclay Pearce Capital's Wealth Management Team, joined by Heath Moss of HLM Investments. Thank you very much for joining us. Have a great day.
Have a great weekend, everyone. Bye.
Now I've got to figure out how to actually end the recording on this thing. No, it's
Every
gone.
week.
Yeah, I got to shut up. Here we go. Yes, I'm sure I want to stop recording. Why don't you just stop? Okay, bye.